I repeat it, you need to wait for a change in the state of delivery. If it doesn't do that, you're not looking for a trade. You're still waiting underneath the liquidity pool. It is not enough that we've taken the liquidity pool, in this case here, and we've printed a bullish candle as an example. You need to see this change in the state of delivery combined with a fair value gap as an entry point. Traders, in today's video, we're going to be revisiting the Asian session modules that I've been teaching on this channel for a while. I'm going to be giving you different variants, how to trade it, what it is, and how effective they can really be. So if you want to learn everything about the Asian session modules, you have to make sure that you stick to the entire video, as this is going to be a long, comprehensive guide to the Asian session modules. So with that being said, let's get started. Alright everybody, so I've prepared some drawings here for you to make the teaching easier for everyone to follow. Nonetheless, I know it may seem overwhelming at first, but we're going to be getting into all the details and make sure that everything is understood. Now, the very first thing that we need to understand when we talk about Asian session modules is the timing, okay? And this on the top right is the time window that you're going to be using for this module, which is to say you're going to draw a range from 8 p.m. till 3 a.m. New York time, okay? All of this is based on the New York time zone. You will have to do your conversion depending on where you live. But what I'm teaching you here now is all dependent on the New York on the New York time zone. Now, with that out of the way, your job within this range is to identify the lowest low and the highest high in this time window. Those are going to be your liquidity pools that you're going to be trying to trade opposite to. Now, you have a 3.5 hour window to trade this module after 3 a.m., which is to say that you stop trading by 6:30 roughly, right? You can stay 15 minutes longer, 50 minutes later. It depends on how the day is structured regarding news events are coming, potential fundamental catalysts going on. Those things do affect how the module will perform. But as a general rule of thumb, you want to stick to 6:30. Now, once you've identified your highest high and lowest low within the time window that I've given you, all you're simply going to be doing next, and let's actually keep the drawing, is drawing out in time and use that as your liquidity pool draws. Once you've identified the highest high and the lowest low within the range, and this is for the dual liquidation module, okay, there is a few more. I'm going to be talking about the dual liquidation first. This is referring to the dual liquidation, which is what you get most days, which is to say that both sides of the Asian session range will get taken out. And all you're doing is you're looking for price to sweep whatever side it does first and trading opposite to that. Now, what you target is completely up to you. You can target the opposite end of the Asian range, which in this case would be here, if you were to go long down here. Or you can target a fair value gap that forms on the way down. Maybe we have one here. You can target structure, liquidity, whatever you're comfortable with. There is a lot of room to play with this module. So you're free to backtest and adjust to your own liking. But when we have dual liquidation, which once again, I repeat, is the most common one, you're looking for one side to get rated. As it does so, you're jumping into the 1 minute time frame and seeing, is there a change in the state of delivery? Which is to say, if we're coming down like this, do we change that behavior once we clear the liquidity pool, which we clearly do over here, once we shift the market structure. After that, you're going to wait for more candles until a fair value gap forms. Let's say a fair value gap forms there. That's the entry point. Okay, I repeat it. You need to wait for a change in the state of delivery. If it doesn't do that, you're not looking for a trade. You're still waiting underneath the liquidity pool. It is not enough that we've taken the liquidity pool, in this case here, and we've printed a bullish candle as an example. You need to see this change in the state of delivery combined with a fair value gap as an entry point, which would be the example over here. Now, there's a few more things that you need to consider when looking to trade dual liquidation modules. Number one being that if we do end up taking the liquidity pool, right? Let's say this is the Asian session low, the market comes into it, and all we do is push lower, even if we change the state of delivery underneath the liquidity pool, you are not looking for a trade. You need to wait for the market to get above the Asian low and then see the change in the state of delivery. The change in the state of delivery needs to happen above the pool, in this case for the Asian low. The opposite would be true for the Asian high. So let's say this time we have the market moving into the Asian session high. Now, if the market does this, right, which is to say that we shift the behavior here, there's a nice fair value gap here to go short, you're not taking this trade. Reason being is because we're still above the Asian session high, and it could be a single liquidation day, which is going to mean that the market is going to continue trending higher and your fair value gap is going to fail. So for you to increase the probability of a winning trade with this module, you need to wait for the market to get back below the pool, which in this case would be the Asian session high here, as drawn with this line over here. And you can apply this module to whatever forex pair you're experienced with. I'm currently testing a variant of this on the Nasdaq, which I've currently done on my most recent live stream. It tends to work very well as well, although I don't have enough data on it, and I'm not going to cover that now. But if you want to follow along with all the modules, you can follow my stream. Moving on, let's talk about the single liquidation module, which is the midline test. So there will be days, right, and I don't want to extend myself too much with this, where we simply just don't manipulate both sides, right? We don't get a dual liquidation. We instead get a single liquidation module. Single liquidation. Now, the characteristics of it are rather straightforward. You're looking for an impulse move into the pool, okay? An aggressive move that extends well over the pool and accepts underneath it. The more candles we print underneath the Asian pool, the more likely we are that it is a single liquidation module, also known as the midline test, which is a strategy that I spoke about 1.5 years ago now. Now, what you're doing in this scenario is you're no longer expecting this liquidity pool to get taken. You're now expecting a test of the midline of the box, which is the equilibrium point, and you're looking for a fair value gap, POI, naked wick, whatever you use as an entry point to execute the trade. So we accept below for a long period of time. Once again, you're not determining this specifically with minutes or hours. You're just looking for acceptance underneath the Asian low with an aggressive move through it. Once you get that, you're then going to look for a pullback. Even though, yes, there's a buying opportunity here, you're still expecting only a pullback to form. You're going to be looking to enter on a area that you consider high probability, which for me tends to be fair value gaps. And at that point, you're looking for the short position to unfold. You are expecting the market to then drive lower with the Asian high being protected in this particular day. And it has nothing to do with the actual protection of the Asian highs. It has all to do with the liquidation module being a single liquidation. The last module that I'm going to talk about in this video is the protected liquidity, which will happen when the Asian high or low is pressed against a fair value gap or a structure point. So let's say, let's take this very exact example. Let's say that on the left of the chart, this high happens to be sitting at a higher time frame fair value gap, right? You have a 4-hour fair value gap that the market formed over here. Let's actually do this a little bit better. Let's try to do this as such. We formed a nice fair value gap moving down on the higher time frame. Let's say this is your fair value gap, and the Asian high or low is pressed against it. Once you have that, you are expecting that this is going to be protected for the day. this Asian high in this case, because it's pressed against higher time frame structure. And at that point, you have multiple options. You can be looking for the short on a pullback into a fair value gap to take the Asian session low, and that could be your trade. Or you could try and play the single liquidation module, knowing that we are likely not going to be breaching above the Asian high, which is to say that we break below the Asian low, we accept through it, we then pull back to an area within the equilibrium point of the range to expect a new sell-off. And this is how you would look to trade the 3 different liquidation modules. Now, we are now going to be jumping back into the charts. I am going to be showing you just this week price action on the euro dollar, and you're going to see how this all makes sense as we jump into the charts and look at the candlesticks. All right, everybody. So now you're looking at a euro dollar chart on the 15-minute time frame, and you're looking at a few days worth of price action here. We're going to start unraveling what is really going on in these markets. Now, when we look at the orange boxes, they represent the Asian range that I spoke about. If you look here, let me actually move this out of the way. You will see that my time zone is set to New York local time. So we're looking for 8 p.m. till 3 a.m. boxes. We denote that, and now we know that we have liquidity pools above and below them. When we look at today's price action, what you can see is that we instantly manipulate the Asian session high. We can jump into the 1 minute for further reference. We trade above it here with this move, and look at the change in the state of delivery, which is what I spoke about. You get the exact same setup, and this happened just today, okay? So you can look to take advantage of these trades. What you see here, once again, the Asian session high sitting here. We unravel, we change the state of delivery, right? We clear this minor liquidity pool, and then we change the market structure right here with this break lower. Let's quickly put this in red. We change the state in the delivery and we move lower. At that point, once you've cleared the Asian session pool, and we're below the Asian session pool, in this case for the Asian session highs, we change the state in delivery. All you're doing now is looking for a fair value gap to go short. And you have multiple options, right? You have this one here, and what I think is the most optimal one to me, in my eyes, is this one here. So you're looking to go short there. Now, in terms of stop loss placement, right, you could have shorted here. You have multiple options, and I'm never a fan of placing my stops above swings because swings are liquidity, and I don't want to be liquidity more often than not, so I don't like doing that. I like to place my stop loss through candles that close through structure. So what I mean by this is we have these sets of flows here. This bearish candle, big wide-ranging candle, close through these lows there. So therefore I consider this area to be done, and the market should not get above this. This is where I would have placed my stop on this trade. Now, in terms of targeting, guys, this is where it gets subjective, because I said this module allows for a lot of flexibility. You can look to target the equilibrium of the range, the opposite Asian low in this case, a naked level, a structural low, whatever you want to do. For the sake of this video, let's assume the equilibrium point of the range, which would be right there and then, and you get that delivered to you for a 1 to 2.29 R winner. And this was just today following the Asian session strategy and the Asian session delivery as we break beyond the highs, change the state in delivery on the 1 minute, and we pull back into a fair value gap. That's how you could have traded this module today, and this module repeats. Now, let's take a look at a few more Asian session ranges. What do we have? We have another one here. 8 p.m., 3 a.m. We go to the 1 minute. We look at a change in the state of delivery above the pool. So I'm showing you this example because I need to make sure that you understand the importance of being above the pool. There we are above the pool, and then we're looking for the change in the state of delivery. Now you have a few options here. This is a continuation right there above the Asian session low, and you could have used this fair value gap, which would have never provided an entry to begin with. And this is something that I want to show as well. You're not going to get a fail on every trade that you take using this module, and you're not going to get an entry. Not an entry. You're not going to get a trade every day using this, at least if you're just looking at one pair. If you had 3 to 4 pairs, yes, there may be opportunities every day. But if you're simply trading euro dollar with this module, you're not going to get filled. There will be days where the market runs without you, and that's okay. Now, I don't want to extend myself too much with that because we have a lot of things to cover still. And we're going to talk about the fair value gap protection. What you see here is once again another Asian range, 8 p.m., 3 a.m. And you can see that the Asian session high is pressed, right, as you see here, into this higher time frame fair value gap. If you go to the hourly chart, you will see there is a fair value gap here. Now, once that is known, we said that we could look different to trade different ideas. We could look to either sell a pullback into the Asian session high, which once again could have been this leg up, but you don't really have a fair value to lean on, so you're not able to do that. Or you can wait for the Asian low to get taken out. Let's go to a 15-minute chart, for instance. Let's see over here. This is 3 a.m. This is correct. And you're looking for acceptance, which we do over here with this big bearish candle. Let's go to our 5-minute so we can see that better. We get acceptance here, and we pull back into the fair value gap, as we said. You could have used this as your entry point. And once again, you're not placing your stop above or below the swing point, which in this case would be clearly here, but you're using the thrust principle, which in this case would have been this bearish candle here, wide range, and you're looking for a wide ranging candle that closed through the low right there. And once again, you target whatever you think it's the best target for you. You could have, once again, target the 50% of the equilibrium if it makes for a decent risk to reward ratio, which once again would have been right here. Or you could have looked to target this fair value gap that you have hanging in lower right here. That is completely up to you and for you to decide. So I don't want to make this video too long. Hopefully this was helpful, and this is everything you need to know regarding the Asian session modules.